FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And guys, in this video we're going to take a look at some of the trade setups from today. Also a couple from the last couple days actually. And we're going to break those down for you guys so you guys can understand the concept, right, of how to trade in line with market makers. All right, so we're gonna go into that in detail, guys, so stay tuned and let's get this started. All right guys, so let's go ahead and just start out with all the pound pairs, right? So this morning during London we essentially had very similar setups happening on all of the pound pairs, as you can see. Okay, so pretty much the exact same setups. Now question is, do you see this setup off the bat, right? So what do we have here? We have price came up yesterday, created a high, came back down during Asia, and then during London what happened? They went up. Right now some went up higher than others. Okay, so like pound JPY, pound CAD, pound NZD, pound AUD. Okay, so here's the important factor of why some of them went higher than others. Okay, now when this move was created here originally, okay, I want you to pay attention to this right here. See that long wick there? Okay, remember before this candle, when this candle started, that wick was all solid blue, right? So what do you think happens with a solid blue, two solid blue bars, actually three in a row like that? You know, it induces traders to go long, right? It tells traders to go long, right? You have the EMAs that most traders use, the 50 and the 200, okay, all going up in that direction, right? So they get people to go long. As soon as they accumulate enough traders going long, okay, then they can go ahead and go short, right? Or they can trap them. And so essentially that's what happened on all the pound pairs, right? So they all did the same thing, as you can see. Okay, so as soon as they have them trapped, what do they do next? They start the accumulation phase, right? So they start to accumulate contracts, basically, right? So you'll start to do this, which is do nothing but move sideways, 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 sideways for, you know, the majority, if not all, of the Asian session. You know, from 5 p.m. Eastern all the way to 2 in the morning. All right, so that's what they did. See that? Now, as soon as London came today and it opened, they make their move, right? And this is something that you have to let them do, is you have to let them make their move. Let the market makers make the move on whatever it is that they're going to do, right? Let them show you their cards first before you react to it. Okay, so in this case here, what did we have? We had market makers right out of the gate, out of Asia into London. What did they do? They went all the way back up, right? Now what's the reason for them going back up? The reason for them going back up is, if you think about these traders that they have trapped here, right? These traders, what were they thinking? They were thinking long, right? Well, if you come back down as a retracement, right, you can convince them that, hey, it's still good to go long because they're expecting that move, this move here, to happen. Okay, they're expecting a continuation of the trend, right? But you guys, we as traders that trade along with market makers, we know better, and we know what they're doing. We know that what their trap moves are, right? And they're just basically trapping traders, more traders in the zone. Okay, so question is, why did this go higher? Why did this not go lower? All right, so to answer that basically is going to be, if they go higher, okay, so on this specific pair, pound USD, if they go higher up here, okay, what does that do for them? Essentially, it allows the traders that were originally trapped here to be released from that trade. Because if you go all the way up here, okay, you're essentially letting those traders off the hook and letting them break even, right, on the trade. So if you have a lot of traders trapped here, because, you know, being pound USD, it's a very popular pair, obviously, so you're going to have a lot of volume trapped here, right? So if you go all the way up here, you're basically giving them permission to leave, right? And if you're going to start making a different move towards the bottom, you don't want them to leave, you want them still trapped, right? So you're not going to go all the way up here to release them. You're going to go barely up here, okay, just to convince more traders to go long again, so that way you can go short. You follow me? So on pound JPY, why did they go higher? The only reason for them to go higher is because they want more traders to go long. Okay, so on this specific pair, pound JPY, they didn't have enough traders going long. So what did they do? They convinced more to go long. By doing what? By doing the 1, 2, 3, A, B, C, D, you know, whatever pattern that they look for. Okay. So that's essentially what happened on all the pound pairs, right? And so now we're looking for us. We look for what? A double top and M formation, multi-session M to happen, right? And so if we start looking at line charts, okay, we can pretty much see the same. It looks the same on all of them, right? Now let's put in one more caveat to that, and let's go ahead and switch it to a 5-minute chart real quick. And so now, can you see the M formation here? 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 Right? So if you're just looking at it on a 15-minute chart, you might have missed it, right? You might have not have seen that they were what you would want to see, which is basically an M here, right? So you might have missed that. A good way to catch it, to make sure that you don't miss it, is to go to the line chart, okay? And sometimes if you just toggle to the 5-minute chart, it should help you see it if it's there, right? Like this. So just keep that in mind. If you need to, just toggle real quick to the 5-minute chart and see, do you see it? If you see it, great. There's what you were looking for, right? So anyway, so you take the trade, you go short on it, okay? And you can see they all pretty much did very similar things, depending on, you know, obviously each pair is different. So some of them went to the 50, other ones went to the 200, right? So, but no matter what, all of them did at least 30 pips to the 50. Some of them did 60 to the 50. Yeah, this one was almost 70 to the 50. This one's 72 to the 50. So all of them different, same theme, different, pips depending on where you got in and out at. But at least you had, number one, the EMAs that you could have used if you wanted to as a take profit, right? And then you can see that a lot of them, once they got to either the 200 or the 50, right? So this one made it to the 200. What did they do? They gave you another setup right back, right? So they gave you a second setup right back into the US session. And that pullback was about 50 pips. So here it is on this one as well. They all did the same thing. And this little pullback here was about 50 pips. So just on one pair, it doesn't matter which pound pair, you would have gotten, very similar results. Where you had the first wave down would have been about 30 to 50 pips, depending on which pair. And then on the way back up, you would have gotten another 50. Right, so now you're looking at one pair and close to 100 pips just on one pair, and you're done. Another pair that was that had a very nice setup was CAD JPY. And this one here, I want you to look at what's happened so far on this pair. This is the beginning of the week here, and what have we done since the beginning of the week? We've gone up 3.5 days. Okay, so after 3.5 days, what do we want to come? We want to come down, right? So if we look, can you see the M? Right? There's your trade right there. Back down to the 50 EMA. Because you have the 50 and the 200 in your favor, right, where price is above both of them, you can use them as take profits. But it's just another example of what you can see when you're switching between line charts and bar charts, because sometimes the bar charts doesn't give you the exact look that you want. So just switch over so you can see it more clearly. All right. AUD CAD. Can you see the setup on AUD CAD? What was the setup on AUD CAD? AUD CAD was basically a type 3 setup, right? You have your Asian range here. Price came up to the middle of the range, came back down, spiked it again to the middle of the range, and came down. This is your trade. Right, so there's your trade right here. So Euro USD, Asian range here. What do we have? The high from yesterday, which was up here. What did they do for the Asian range? Went back up to retest it, went back down, went back up again, right? Now you may not see it here. So on the bar chart here, it looks like what? A quarter wood, right? A quarter wood setup, right? So you have that as your entry. If you switch over to the line chart, what do you have? You got a nice little nice M formation there, right? So there you go. There's your trade. You take that one down to the 200 EMA. So depending on where you got in and out of on that trade, that was another 30 pips for you that you could have had. NZDJPY. What do we have on this one? We got our Asian range here. Coming out of the Asian range, what happened? Price went right to the middle of the range. It stayed there in the middle of the range. There's your M formation there. And you drop. There's your trade right here. Okay. And then sure enough, into the US, what happened? You have one, came back down for a second test, came back up again. So you have two trades. 30 pips down and 22 pips going up. So you have two trades available on NZDJPY. If we take a look at EuroJPY, if we go back, what do we have? Same thing as CADJPY, right? Nothing but going up since the beginning of the week, so we need to reverse. If we switch over to the line chart and just do a quick flash over to the 5-minute chart, do you see the M? Right? Asian range, and then we go up for a type 1 setup, create the M here, and then drop. Drops all the way down to the 200 EMA, and that's your trade. Right? You induce traders to go long. Look at all the nice little spikes wicks at the very top there. As soon as they have enough traders going long, they switch it. And there's your trade. You know? 33 pips to the 200 EMA. There you go. So very important for you to just wait and let them do what they do, right? Let them show you the cards first. Don't jump the dealer. All right? Don't jump the gun. Let them show you first. Okay? The reason is because the majority of the time, you're not going to get a trade out of the edge. Okay? The majority of the time, they're going to show you what they're going to do first. I'd much rather you miss a trade out of the edge because you're waiting for them to show you and catch one of these trades here where you can see it clearly. Alright? That's very important. You need to be very picky. Okay? You don't need to just go into a trade and just trade because the market is open. Right? Because that's just stupid. You're gambling at that point. Okay? You're not here to gamble. You're here to win money. You can't do that unless you're making the best possible trades. Okay? So very important. Take your time. Be picky. Be very picky. Pick only the best ones possible. Okay? You're not trading 30 pairs here. You're just trying to pick out of the 30 which 1 or 2, 3 have the best absolute setup that's clear that you can see. Okay? That's it. That's the goal. And remember, if you want to make it as simple as possible, guys, the only thing that you're doing, okay, if you strip everything away, the only thing that you're trying to do is you're trying to trade off either the high or the low of the day. That's it. Nothing else. Okay, that's literally all you're trying to do is trade off of the high or the low of the day. That's it. Okay? So in the most simplistic form, that's all that you're doing. Is trying to trade off the high and off the low of the day. That's it. Alright? If you want to see these things happen in real life, you have to do back testing. I can't stress that enough. You have to do back testing. Okay, if you've never done it before, I'll link a video here on the top right so you can see the video I did on back testing. But you have to do back testing to be able to see this stuff happen in real life. Okay, you do it right here on TradingView. You just hit replay here and go back 3 months and then start replaying the bars. Okay, and I mean, I don't think it gets any better than to be able to do that. okay, and practice. So if you're having a hard time doing this, or if you're having a hard time seeing it as it's happening, I promise you, if you go back and replay the last 3 months of charts on a pair, and you sit there and you draw out your Asian boxes and you wait for them to show what the move is going to be, I'm telling you, you'll see it happening in real life after that. Okay? So, guys, I hope that you've learned something and I've added value from this video. Please let me know in the comments if you took any of these trade setups actually, or if there was others that you saw that I may have not discussed here in this video. Alright guys, thank you so much for watching the video, guys. Please share with others, guys, if you found value in the video. And thank you. Have a good night. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntradinggroup.com. Once again, guys, thank you so much. I'm truly blessed.